Good morning, everybody. October the 30th, the day before Halloween. And the Halloween gremlins were working early this morning, at least on my machines. I apologize for the delays and the unusual opening, but sometimes the software wins, and it sure beats me. It sure beat me this morning. So anyway, we're up and running right now. And we'll get started a little bit later than normal. Came in this morning facing news that could impact the market, and there's two forces going on in the market right now. One of them is the end of QE3 and what QE 1, 2, and 3 have brought to the market. That's gone. QE3 is over. And the Fed has said the labor market's recovering, the economy's good. We've got no worse than modest economic growth, but probably moderate. So QE3 has been what has been supporting the financials and the stock market, and that's gone. So that brought in selling yesterday in the financials and the equities. The strategies that have worked since March of 2009 are no longer in effect. So now if we get QE4 because of economic softness or the collapse of the market, game will be back on like it was back then. Now we have economic news. So GDP came in expected at 3, came in at 3.5. The deflator, I didn't see that number, but it was a forecast at 1.4, probably no worse than 1.5. And then we'll have jobless claims looking for 280, came in at 287, which is, I mean, 290 has been the default, now it's 285, so 287, it's a wash. So what we have is that this GDP number allows the Fed to stop QE3, and it also allows them to raise interest rates in 2015 off the idea of an economic recovery. So easy money is behind us. We started out this morning, some of you got the emails, and it was in the room off and on. We had a sell at 19 to 23. We liked the buy side better today because of the 7-year auction. We wanted to buy into weakness. Sell 2 was 27 to 31. Yeah, the Fed, no later than yesterday afternoon, but I mean the Fed, all those people have those numbers, the ones that count, or they do their own internal work, Nancy. This morning, we had a buy at 9 to 13. And then 1 to 5, and we got to our 9 to 13. I like the long side of the market today for the 7-year auction. Now you say, gee, Manise, why a 3.5% GDP? How could the market rally off of that? Well, number one reason it could rally off of that is dealer support for the 7-year auction. And the other one is it's old news, and the early numbers coming out for the fourth quarter are mixed to lower than forecast. So that's why the 3.5 might not cause a rally. So that's it for the ZN this morning. Like I said, I really don't like the short side of the market because of the 7-year auction this morning, like the long side. Okay, Janet Yellen speaks at 9 Eastern. She picks up the mic right now. We are going to be subject to news spikes off of her comments, off the news algos. So usually most of those are behind us in the first 2 or 3 minutes of what she says. I imagine she will reiterate what they said yesterday at the FOMC announcement. But you never know for 100. You're never 100% sure. So we've got factor too. This morning, the knob spread is still expanding. It's holding its own. The 30-year is stronger. The buy in the 30-year was 13 to 17, and then 5 to 9. On the sell side, our first sell band is 27 to 31. I really don't like the sell side of the market. And then our second one, because of the knob spread, is I'd like to get it done at 7 or better, but the next resistance band is going to be 4 to 8, so that's sell too. But my preference is to be long today. So we got to get through the start of Big Janet's reinforcement of yesterday's FOMC decision. Okay, looking at gold. Our numbers from yesterday actually were pretty good. We liked the buy yesterday on gold, I believe at 1200, probably 1205 to 12 even. So we had a 5 to 7 buy and we had a 1200 buy. So the number 2 level held from us from last night's work. And we've got some volume down here in the 93 area, so 95, 93 would be buy 2. I don't think we get there, but again, a lot of it depends on what Janet says. We had the spill from 11, so 10 plus or minus will be sell 1, and then 15 plus or minus will be sell 2. So our numbers from last night worked out pretty well. And the gold sell last night was 13 to 15. Or a little bit lower, so we can lower those by $5. Look at the euro. The news this morning, really, I mean, based on what we saw, and it may be built in, the day before major news announcements, 100 plus officials in our government and the Treasury have that information by 4 in the afternoon. Obviously, the Fed, Treasury probably have it earlier than that because they are where a lot of the numbers come from. So we left yesterday on the euro wanting to buy 15s to 25s. Obviously, we didn't get close to it. The extension up was 90, so we've got to have this 60 to 70 as our buy one. It is after the fact. Then 40 to 30 will be buy two. I really like the idea of selling this contract. So our 15 to 25 is prime celebratory, sell 1, and then 40 to 50 for sell 2, leaning against this in the overnight. So this single prints right here is initial resistance, and then this low right there at 35, 40 would be the second resistance band. So right now, 26.25 looks pretty stout. Buying, getting stops below 25.50, I think makes some sense. The 65 to 75, I really don't like being long the euro, as you well know. We've just made so much more money on the short side, and it is where the European Central Bank wants it. They want it lower. Okay, crude oil. Third quarter GDP strong. Fed thinks that the fourth quarter GDP will at least be modest economic growth, so more people going back to work. more demand for petroleum products. We had an 82.50 to 82.75 sell yesterday, way over the mark. We had an 81.50, 81.75, then 81, 81.25. So our number two buy zone worked. So we'll just leave that in there. And then 50 to 75 for buy two. On the sell side, London's high is 88, pretty aggressive, 75 to 82, sell one, and a quarter to a half is sell two. Yesterday's EIA report was mixed. Products had big draws, which does support the strong economic or at least moderate economic growth scenario put out by the Fed. Big draws in distillates, 5 million barrels. Natural gas has replaced heating oil as for warming homes. That gets less and less each year. So trucks, aircraft, trains are burning diesel fuel right and left, which does suggest economic strength. So I see crude oil in a bracket. The best selling is above 82.50 and the best buying is below 80.50. That's a $2 range. That's how it usually trades. Okay, looking at the E-mini, I haven't seen any remarks from Yellen yet. I don't think she's impacted the market. She probably will say what was said yesterday. The economic numbers this morning are supportive. GDP at 3.5. They were expecting 3. So that could take us up. Starting out early this morning, I had resistance at 70 to 75, and I had support at 55 to 60. So our first buy is 60.62. 55.57 will be buy 2. On the sell side, it's 69 to 71. That's where we are right now. We should be able to make it up to our second zone, 74.76. So again, the battle is this QE3 over versus economic news. And this morning's economic news was stronger, much stronger than forecast. Jobless claims came in pretty close. The default number is 285 now. So I don't think anybody's paying any attention to it. So QE3 over versus news, tempered by Yellen. And usually the first speech given after an FOMC just reiterates what was said the day before. It usually does not impact the market, but you never know when they pick up the mic what they can say. So to me, it's the end of QE3 versus the economic news, and of late it's been soft. 69 to 71 is very aggressive. The 74.75 plays against structure. On the buy side, 60.62 is support. But the best support is at that 55.56 area. We can stay above 55.56. This market can trade higher. Okay, it won't take too long to get everything posted this morning. I'll get that up and done. Hopefully things will get back to normal here pretty quickly. There's always something to deal with in trading. I mean, for me, for you, for everybody else, it's just a part of the game. You have to get used to rolling with the punches, so to speak. You never have all you want. You never have it exactly when you want it. Not everything's, it's never 100% lined up the way that you want it. So this morning we lose our news feed for a bit. See you as fast as I can. Bye.